Is it possible to generate high returns in the stock market by shamelessly cloning the moves of the best investors in the world? Well, a paper out of the University of Nevada from 2005 suggests that you can. And since October 2021 here on the channel, I've been running a bit of an experiment with a hypothetical $100,000 portfolio where I tried to implement shameless cloning. And since we've just had a fresh batch of quarterly 13F filings from investors that I like to clone, be sure to check out the previous video on the channel if you haven't already for some more detail on those recent moves from some of the best investors in the world. It means that it's time for our usually quarterly update on how the portfolio has been tracking. We'll check in on how the portfolio looked last quarter. We'll see the returns that it's generated both in recent times and since it first started back in October 2021, and I'll walk you through some of the recent changes that I've made given the latest quarterly moves from some of our favorite investors. I started this series on the channel really for two main reasons. One, I just kind of wanted to do a bit of an experiment and see what the returns look like and see whether you could genuinely produce high returns by just mechanically copying the buys and sells of some of my favorite investors. And secondly, I also wanted to use it to document some of the challenges with implementing a strategy like this. Although I've tried to keep it fairly structured and set up a lot of rules around when to add stocks to the portfolio and when to take them out and what allocations to have and so on. Occasionally weird stuff just pops up and you have to make a little bit of a judgment call around how you take moves from a group of super investors and turn it into an actual real life portfolio. And also keep in mind that this really is just an experimental portfolio. I'm not trying to recommend that you buy or sell any of the stocks that I'm buying or selling in the portfolio. I'm simply just trying to clone some of the moves that other investors are making, nor does the portfolio reflect my own personal holdings. But with all that said, if you enjoyed today's video and haven't subscribed to the Investing with Tom channel already, please be sure to do so. That way you can see future videos here on the channel, and you can also see future quarterly shameless clone portfolio updates. And if you're interested in checking out ShareSite, which is the portfolio tracking and tax reporting tool that I'm going to be using to kind of monitor the progress of this portfolio, check out the link in the description, sharesite.com/investingwithtom. There is a free version of ShareSite you can use forever, but that link will get you 4 months free off of an annual subscription. It's a tool that I use personally for my own portfolio to understand capital gains, dividend income, and currency fluctuations and how that impacts the returns that I'm generating. And I also use it to make tax time a whole lot easier than it would be without a tool like ShareSite. So check that out in the description if you are interested, and thank you to ShareSite for sponsoring the video. They have been a very long time partner here on the channel. Now, if you're interested in jumping straight to the portfolio returns and what the portfolio looks like as of today, I will leave some timestamps on YouTube along the bottom of this video if you want to jump forward to that. But just before we do get into that, I want to do a quick refresher on some of the rules that I've set up in order to build this portfolio in a reasonably structured way over time. And the rules are reasonably straightforward. The first one is I have sort of a Mount Rushmore of 6 different super investors that they're kind of the investors 13Fs that drive the stocks that go into or come out of the portfolio. Those 6 investors are Warren Buffett, Charlie Munger, Monish Pabrai, Guy Spear, Lee Lu, and Norbert Lu. I'm not completely closed off to looking at other investors if we're really short on ideas and we really need to. That's something we did in some of the very early quarters of building the portfolio where we were trying to get some initial positions in there. But that is the core group that I really want most, if not all, of the stock ideas to come from. Secondly, the end point I kind of want to get to is a roughly 10 by 10 portfolio. So 10 stocks with about a 10% allocation each. We're still not quite there yet. In this video, you'll see that we're currently at a 9 stock portfolio. 8 of those are roughly a 10% position at cost. One of those is about a 20% position at cost, but the eventual goal is to get to roughly a 10 by 10 portfolio. And considering that all of the investors that are in that Mount Rushmore group are value investors, they're trying to buy good businesses at reasonable prices, we also want to be price sensitive. So the rule that I've set up there is I want to buy a new stock if I choose choose to buy one at no more than 30% above the midpoint price in the quarter that an investor bought that stock in. So if, for example, Warren Buffett buys a stock in a particular quarter and the price range in that quarter of the stock was, say, $80 to $120 per share, I would take the midpoint, which in that example is $100 per share, and I would want to purchase at no more than 30% above that midpoint, so $130 a share in that case. So with all that said, let's jump across to ShareSite and take a look at how the portfolio stood at the last quarterly update at the beginning of March 2023. Okay, so we're over on ShareSite now looking at the diversity report, and I've selected the beginning of March 2023 here just so you can see what the portfolio looks like last quarter. So this is what it would have looked like last time I did a Shameless Cloners portfolio update. This should just give you a feel for the positions that were in the portfolio at the time. So the largest position at the time was Chevron. That was about 13.8% of the portfolio. We were actually kind of struggling for stock ideas last time around. So for that reason, we had a pretty big chunk of the portfolio just sitting in short-term treasuries. That's essentially just a cash alternative. So if I do find a stock to buy, I would take money from that short-term treasury kind of cash alternative and invest it. But at the time last quarter, that was about 13.6% of the portfolio. That was followed by Alibaba at about 12%. Now, Alibaba is our one stock in the portfolio that remains a 20% position at cost. The others are all roughly 10% at cost. The reason it's only shown as 12 here is because Alibaba's gone down quite a bit since we've owned it in the portfolio. But that is our last kind of 20% at cost position. Next, we had Berkshire Hathaway, also about 12% of the portfolio. We then had, I believe, Process is the next biggest position at around 10%. We then had Activision Blizzard about 10.4%, Process about 10.3% roughly, Alphabet at about 8%, and we had two Brookfield companies at about 7.4 and 1.8% respectively. So I'm sort of thinking of the Brookfield positions as kind of one investment. That was a clone from Monash Pabrai originally, and Brookfield did a spin-off, which meant that shareholders of the one Brookfield business ended up with two. They ended up having Brookfield Asset Management and Brookfield Corporation. So that's why they're quite different in size. Brookfield Asset Management was spun out of Brookfield Corporation, and I'm kind of thinking of them as one investment. But overall, the portfolio at the time was worth about $87,000 in terms of its market value, so down a bit from our $100,000 starting point. Okay, so jumping to the portfolio overview now, let's kind of run through how the portfolio has been tracking so far this year. So since our latest update, or since our last quarterly update, the portfolio is up in value. We're back just back into the $90,000 sort of range. So the portfolio is up a little bit in the last quarter. And this is how it's been tracking for the year against the index, the S&P 500. So we really kind of came out hot at the start of the year. Before the portfolio kind of raced ahead of the index at the beginning of the year. It's since got a lot more kind of neck and neck towards March and April, and it's recently actually fallen behind the index this year. So this is obviously quite a long-term experiment. I want to run this for several year period, but at least year to date, the Shameless Cloner portfolio is up about 6% versus the S&P 500 up almost 10%. So we are lagging the index a little bit year to date. And if we go back to since inception here in the portfolio, again, we've been pretty neck and neck for a lot of this period of time with the index. We had a really poor start. I think a lot of that was explained by the big 20% allocation to Alibaba that just got absolutely destroyed in the portfolio. We then regained a fair bit of ground, and there have been times where we actually pulled ahead of the index. So July last year we were ahead of the index. We tracked it pretty closely and snuck ahead again back in January 2023. But again, in recent times, we've started to fall behind the index again. So since inception, we're down about 6%, versus down about 2.5% for the S&P 500. So in terms of returns, it's been about a year and a half, so not an incredibly long period of time, but we're starting to build up a pretty good picture of an initial comparison against the S&P 500 at least. Okay, so continuing on, let's have a look at the current portfolio, and the keen viewer who's been keeping up with the kind of quarterly updates on the series here will notice a couple of changes in the portfolio. So I'll just go kind of from top to bottom here. East West Bancorp, that is actually a brand new position in the portfolio. So if you saw the previous video on the channel, which went through the quarterly 13F updates from some of my favorite investors, you will have seen that Lee Lu at Himalaya Capital initiated a new position in East West Bancorp. So we have cloned that investment that has gone into the portfolio. I'll talk a little bit more shortly about where the money came from to make that investment, but that's actually gone right in there as our largest position. That's just kind of how the chips fell, I guess, in terms of the positions that we sold to allocate towards East West Bancorp, but that's a new position in the portfolio. Second one, Occidental Petroleum, is actually also a new position in the portfolio. That has essentially been directly swapped with Chevron. So Chevron was previously quite a large position in the portfolio. That was a clone of Warren Buffett. Over the past couple of quarters, we've kind of continued to see Warren Buffett not completely sell Chevron, but kind of trim it in a small way. And at the same time, we've continued to see him kind of add to Occidental. So we've essentially just made the same switch this quarter in the portfolio. We've cut out Chevron and we've almost directly replaced it with Occidental. So another new position in the portfolio there. Berkshire remains an existing position, about $11,500 in value or market value as of recording the video. Alibaba, about $10,000, remains an existing position. Again, still 20% at cost. So if we need to find some money to add a 10th stock into the portfolio, because we're currently at 9, it would probably come from cutting Alibaba in half. Google remains in the portfolio. Activision remains in the portfolio. We have seen Warren Buffett trimming Activision in the past couple of quarters. It hasn't been quite enough to justify clearing it out of the portfolio altogether, but we'll kind of continue to monitor what happens with that position. Process remains in the portfolio. DJCO remains there. And we do have a change actually with Brookfield Corporation. So I mentioned before that previously we had the two Brookfields in the portfolio, Brookfield Corporation and Brookfield Asset Management from the spin-off. That was a clone of Mohnish Pabrai. In the latest quarter, Mohnish Pabrai actually sold Brookfield Asset Management and he added to Brookfield Corporation. So I've essentially done the same thing. I've taken those two Brookfield kind of holdings. I've sold the smaller Brookfield Asset Management one and I've consolidated it into Brookfield Corporation. So we sold that kind of smaller Brookfield one and rolled that money straight into the larger Brookfield position, which is now a little larger again. So that's the smallest position in the portfolio now, about $7,600. And if we scroll down, you'll see sort of the graveyard section of the portfolio, I suppose, with a bunch of older positions that are no more, that are no longer in the portfolio. Winnebago, we made about 26% on, but that's since been cleared out. Our short-term treasuries, so that was in the portfolio as a pretty big position last quarter. That has since been sold to allocate to some of the new stocks, so to Occidental and to the East West Bancorp investment. Taiwan Semiconductor was gone last quarter. We did get a nice little gain out of that, 35%, but that was sold when Buffett got out of it. Other older positions in the portfolio: Meta, Hilton Grand Vacations, Chevron, that's obviously a recent sale, Countryside Partnerships, a sale, previous position from Norbert Lu, and of course the Brookfield Asset Management spin-off that Mohnish Pabrai has recently sold. Okay, so let's jump back up to one of the reports here in ShareSite, just so you can see some of the general allocations to the portfolio. So I'll go back to diversity and we'll generate a report for what the portfolio currently looks like, so you can get a bit of a feel for some of the allocations. So this is how the portfolio stands after some of the recent changes in this quarter. So Berkshire is about a 13% position, Alibaba 11, DJCO 9, Process, little under 10%, Activision also about 10%, Alphabet about 10%, Brookfield 8%, Occidental is 13%, and East West Bancorp is getting close to 14%. So just kind of the way things fell with those two new positions, Oxy and East West Bancorp. It turned out that we sold a large-ish position in Oxy, and cash was a large-ish position, slightly more than 10% as well. So they haven't gone up a whole lot or anything since we bought them. That's kind of how things fell with the capital that we used to make the investments. But that is how the portfolio currently stands from shamelessly cloning some of our favorite investors. So I hope you did enjoy that quarterly update of the Shameless Cloner portfolio. I think we're starting to build up a pretty nice portfolio. The returns haven't been super impressive so far. We are lagging the index a little bit, but I'd be interested to hear your thoughts down in the comments below on how you think the portfolio is starting to come along, and whether you would have maybe approached this a little bit differently with some of the latest moves out of the 13Fs of some of our favorite investors. But I do hope you enjoyed the video. If you want to see future videos on the channel, including updates to the Shameless Cloner portfolio, be sure to subscribe if you haven't already. And if you're interested in ShareSite, check out the link in the description, sharesite.com/investingwithtom. That's it from me for this one, and I'll see you on the next video. Cheers.